If you cannot understand market structure, if you cannot understand how to mark your higher highs, higher lows, identifying the trend of the market, you will continue being the liquidity in this trading thing. Most people who come to Forex have refused to just get this basic. If you cannot understand how to mark your structure, how to know where is your break of structure, where is your higher high, where is your lower low, my dear, you're done. Now, in this video, I'm going to show you, I am Dr. Tradex, and I've been doing Forex for a while now. So whatever I'm going to teach you is something that I've been doing. And if you want to learn more, there is a number on my bio, you can DM us. We have paying classes, and we will teach you how to do it yourself. Currently, we are not offering signals because we are trying to make you become a signal giver. Back to market structure. For example, I will start here. You can see the market is downtrend. You all can see that. The market is pushing downtrend, right? So what do? Let's begin maybe from here. You come. When the market was moving, it came, created this low, then it pulled back, then came back and went below this zone. People ask, how do you know up to where the market will get to so that you can mark your lower high? You only mark your lower high, for example, when the market is downtrend, once the market breaks your previous lower low. So what do? You come, since at this zone, you mark this is your lower low. And as you can see, the market did what? The market broke that zone. And that is what we call break of structure. And now, which is our new lower high? That is our new lower high. And then we wait as the market continues to move down. We wait for a pullback. And once the market starts pulling back, where is that? Once the market starts pulling back, that zone becomes our new lower low. In Forex, I'll teach you the higher side. Most of the time, people call it buy side liquidity. The lower side, people call it sell side liquidity. Okay? Once the market starts pulling back, you remember, you don't trade against the trend. You trade according to the trend. If it is bearish, you look for sells. And how do you identify that? When you're selling, you want to sell something when it is at the highest price. You don't want to sell it when it is cheap. So how do you identify? You come, you identify this zone from your buy side liquidity to your sell side liquidity. Okay? And you identify your mid range. This is the mid range. Until the market crosses this zone, anything below here is cheap. Let me identify that for you. Anything below that line is cheap. So we have to sell it when it is above. If we can sell around this zone, here, from here, anything below here, we will be good. Why? Because if the only side that we are sure is safe, that the market, we don't expect the market to break. If it breaks that zone, we know the trend has changed, is this side up here. Okay, but since the market is bearish, we know the only side that is going to be broken is this easily. Okay, not 100%. I'm saying when we are analyzing and marking the market structure, that is basic knowledge. Now, since you have identified where you are waiting for the market to pull back above so that you can sell, you wait. Now, this is a trick that I use. I still don't want just to sell immediately from the 50%. I want a good zone. Okay, so what do I do personally? I take the fib, I drag it to the sell side zone. Okay, once I drag it, let me push it this side so that we can see well. Okay, now once I have put my fib, there are levels that personally I check. I will check at 61. I'll check at 61, and I'll also check at 78. You see this zone? I call it the golden zone. So what do? I check from this zone, from this to this, that zone, around that zone, what is inside there. Let me remove this so that we can see what is in between there. And where are we looking? We are looking at this zone. Now, I want you to see something that fortunately it has happened here, so I will let you see. Now, can you look at this level, 61? I love entering my entries at this 61 level. But at this zone, personally, I won't enter. Why? Because when I look at this zone, when the market got here, it just dumped. So there is no liquidity here. And most people, many traders will use this as an order block. Once they use this as an order block, they will become the liquidity. Why? This is an inducement zone. There is no liquidity here. So this high, you can see this high. Let me draw it. You see this high will become a liquidity. That zone is a liquidity by itself. Okay, another zone is this zone. Okay, that zone will also become is also liquidity. Why? Because there's no liquidity down here at this zone. I'm telling you how I would analyze this market. So this is liquidity and this is liquidity. You can see how close they are. So these are inducement points. So what level? Remember, this is 61, 70, and 78. So what is the next level that I'll look? I'll leave. I've not paid for this, so you'll see a little advertisements. So from that, the next level I'm looking for is the 78.6 level. And at this level, what do we have? We have this zone. Now, since we are almost 100% here, I know now this is the best or the last place, which is not, and this is the most recent uninduced zone. So what do? I come, I draw from this zone, maybe up to that 78, up to that zone. Okay, so I'll remove this one. Let me remove this so that we can see clearly. Okay, this 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 becomes liquidity, and this becomes liquidity, and this zone is free. And I want you to check something else. If you look to your left, what do you see? There is a fair value gap here, and since there is a fair value gap, the market came and ran through. It becomes an inverted fair value gap. So we have an inverted fair value gap here, and guess that now it becomes a good confluence. You can see, and it is now we have a fair value gap, and it's near. You can see it's near our 78. You can see that 78 level. So that is where I would put my entry. All right. So what do you do? Now you have done your analysis. Okay, the 50%, and let's say if you had you had put your entry around here, the 61. Let's assume we are going to put two entries, the 61 and the 78, and see what will happen. Okay, so most people will put entry here at this zone, and let me draw the order block as you would have drawn it there. Okay, and then you'd enter your short maybe there, and then placed your stop loss maybe, let's say at this 78. Most of the time I advise people to put at above 78, and maybe take your 1:2 to 3, something, or that lowest point there. You target your sell side liquidity, of course. Okay, and then let's take another short, but now put it at the 61. Okay, let's see what happens. Sorry, it's not 61, 78.6. Let's put this to 61 and target the sell side liquidity. Okay, let's see what happens. And remember this one, also target sell side liquidity. Let's separate them so that, sorry, like that. Okay, so let's see what happens. Okay, the market comes, pulls back, taps the 61 zone. The lower side, the lower line is the 61, the upper side is the 78. Okay, let's see. If it touches the upper blue line, we are out of the trade. You see, tap, we are out. You see, this was the 61 and this was the 78. So the first trade is done. Now we are on the second trade. Okay, and let me let me put it there so that we analyze it correctly. Okay, there. Let's see what happens. Then of course stop loss is above the 100. Okay, so let's see what happens. The market continues. The market continues. We continue well. The market continues. And guess what? TP hit. Just like that. Now even we can move to 4 hours so that we can see it correctly. See, the first one was a lose, but now the second one, market got into the trade and then to the TP hit. Let me put it one hour so we don't confuse. I hope we are all together now. So with that, I hope you've understood how to analyze using market structure. If you are good to analyze with using market structure, you will get and you will become profitable. So Dr. TradeX here, and that was a good 1:3, almost 4. Bye bye, Dr. TradeX.